Hello everyone and welcome to another episode of the crypto and blockchain series on my channel. Today we are gonna be taking a look at the Graph protocol and the GRT token. You can check more episodes of this series in the right hand corner. There is a link to a playlist, and also make sure you are subscribed for more of this type of content to come. Now let's get into the video itself. So what's the deal with the Graph protocol? Well, it's an indexing protocol, so you could compare it almost to something like a Google, where on the World Wide Web you use Google for searching all the websites. In this case, you would use the Graph to search for information stored on the blockchain. You can also build and publish open APIs, which are called subgraphs, and these subgraphs can be then composed into a global graph of all the world's public information. So as you can see on this animation, if someone searches for this kind of question, there is all this information on the blockchain to be found thanks to the Graph protocol. In case of a global adoption of the Graph, we could say goodbye to custom servers, so we would gain more security but also reduce significantly engineering and hardware resources needed. So here you can see all the data on the blockchains and P2P networks can be ingested and processed and indexed by the Graph, and this makes it then very fast, reliable and secure for the consumers to get all those data. They are also emphasizing it's all just getting started with the decentralized finance, governance on blockchain, all kinds of grants and philanthropy you can be doing, blockchain marketplaces. So thanks to the Web3 protocols, developers can now build dApps, which stands for decentralized applications, with all those powerful features, enhancing the use of the internet all across the money, security, governance, etc. and many more. Here we have a first look at what components of the Graph exists and what they do. So we will look into this in a second, and just at the bottom of the page we can see some recommended reading, which I've already took a look at, a little bit of a sneak peek, and these are really cool articles, so much information in them. So maybe I will do another episode on the Graph and go a little bit more in depth, but feel free to check them out. I will put all the links in the video description so you can check them yourself. Just a short mention, if you remember the video on Uniswap I did, we checked the Uniswap info page where we've seen these overall stats, and this is provided by the Graph. So we've actually seen the product of the Graph already without even knowing about it, which is pretty cool, I think. Also, we checked out the Decentraland marketplace, and this is also run thanks to the Graph protocol. So back to the Graph network itself. So now let's take a look here to the doc section where we have more information about the Graph. So first of all, let's look at the introduction to the Graph protocol itself. So in short, the Graph is a decentralized protocol for indexing running on blockchain. It started with Ethereum blockchain, but you can build your own dApps and adapt this protocol. Here's a short example. So with a popular CryptoKitties dApp, you can ask the following question. So for example, how many CryptoKitties does a specific Ethereum account own, and when was a particular CryptoKitty born? So they explain this is very easy information to get thanks to these commands on the contract. However, in the case of a more difficult question, like who are the owners of the CryptoKitties born between January and February of 2018, you would have to process all the birth events and then call the owner of method for each CryptoKitty that has been born, which would take hours or even days for a dApp running in a browser to get the answer. And basically it's because the indexing on the blockchain is very hard, and the Graph protocol itself solves this today with a hosted service that indexes the blockchain data. And these indexes, or as they call it, subgraphs, can then be queried with a standard GraphQL GraphQL API, so combine them into this global graphs of global knowledge. And how the graph actually works. So the graph will basically learn what and how to index Ethereum data based on those subgraph descriptions, and then it will store them in its database. Here we can take a look on this detailed diagram. So the first step would be that the dApp adds the data to the Ethereum through a transaction on a smart contract. So here in the top we have the dApp, which will make the transaction, then the smart contract will start executing, and we have some kind of an event. That's the number 2. The smart contract emits one or more events while processing the transaction, and these events are continually scanned by the graph node, so that's the middle one, for the new blocks and the data for your subgraph they may contain. So when they acquire this information, it can then run the mapping in this BASM module, which creates or updates the data entries into graph nodes that the graph node stores here in the response to the Ethereum events. Then the dApp actually sends a query to the graph node for the index data from the blockchain using the GraphQL endpoint API. So if we click on this link, you can get an exact explanation how it works and what it does. But in short, the graph node will translate the GraphQL queries into queries for its underlying data store in order to fetch this data. So it will make use of the store's indexing capabilities. So then the dApp will get the information it asked for, and it will display this data to the end user in some kind of a rich UI, which is easy for the end user to read, and the cycles repeat with the new transaction on Ethereum. So here we could continue to the next steps, which would explain how to define the subgraphs. It would go into more detail, how to deploy them, how to query the data from the indexes, but this is more on a programming level, out of the scope of this video. But if you are interested or you are a developer, you can find all the information needed on this website, which is in the link in the video description, so you can check it out yourself as well. So if we jump to the docs home, we can take a look at the network as well and find more about the network. So we now know the basic principle on which the graph network works. We know what the GraphQL does in the process. So now let's take a closer look to the components of the graph network, and those components are indexers, curators, and delegators who provide the services to the network and serve the data to Web3 applications. The fourth one is the consumer. So for example, if we look at the info.uniswap page, then you are the consumer. So the whole economic security of the network and the integrity of the data being queried is made possible by participants staking and using the graph tokens, aka GRT, which is an ERC20 token, so very widely used. And these indexers, curators, and delegators can provide services and earn income from the network proportional to the amount of work they perform and their GRT stake. So we can take a brief look at the indexers, which are the node operators in the graph network and provide the indexing and query processing services. These indexers earn the query fees and indexing rewards for their services, and they also earn rewards from rebate pools that is shared with all network contributors proportional to their work, following the Cobbs-Douglas rebate function. Important feature is that if the indexers are malicious and serve incorrect data to applications, or if they index incorrectly, the staked GRT can be slashed, which should keep the network with as true information as possible. Here just few quick FAQs. So a minimum stake for an indexer is currently 100,000 GRT tokens. Rewards are from the query fees and indexing rewards. Also, there is a verifying process to ensure that the indexer is indexing the subgraphs they have allocated on, which is done by the proof of indexing. Then there are some more in-depth information, very useful if you are actually thinking about doing the indexing. And there are many more important information here, some lines of code as well. So these indexers are more of an advanced usage, so you should really know what you are doing with the indexing. So it's not for everybody, because as they said at the top, the indexers are the technical ones, curators are the semi-technical ones, and delegators are the non-technical ones. So now let's take a look at the curators, which are the subgraph developers, consumers of data, or community members who signal to the indexers which subgraphs should they be indexing on the graph network. So the curators deposit GRT to signal on a specific subgraph and earn a portion of the query fees for the subgraphs they signal on, which should incentivize the highest quality data sources. So these curators have the knowledge of the Web3 ecosystem and therefore can assess which subgraphs are high quality, but they don't need to be technical. For example, if you know which applications are most used, which data sources are most trusted, and which communities are growing, you can gather which subgraphs will be the highest quality. And because of the curation occurring on a bonding curve, it means that the earlier that the consumer signals on a subgraph, the greater share of the query fees they can earn on that specific signal. However, there is still a risk if you get in early, because someone later in the chain, later in the curve, can sell their curation shares, and the value of the shares can then decrease, and a curator would receive less GRT back from the bonding curve. In comparison to the indexers, curators cannot be slashed for a bad behavior, but there is a deposit tax on curators to disincentivize poor decision making about subgraph signaling that could harm the integrity of the network. Curators also earn fewer query fees if they choose to curate on a low quality subgraph, since there will be fewer queries to process or fewer indexes to process those queries. And finally, let's look at the delegators, which are non-technical, and these delegators are individuals who delegate stake to indexers to contribute to securing the network without running the graph node themselves. So by doing this, they can earn a portion of query fees and rewards earned by that specific indexer, and delegators can select indexers based on their performance, which is measured by the query fee rate, fast slashing, so that's the bad behavior of the indexers, or uptime, as well as delegator parameters like the cut of fees and rewards from the indexers. Delegators cannot be slashed for bad behavior, but there is also a deposit tax on delegators, as there is with the curators. So here you have also a short guide how to be a delegator. So this will tell you the risk of delegating tokens, how you could calculate expected returns as a delegator, and also a video guide showing you the necessary steps to become a delegator in the Graph Network UI. So if you are interested in this, definitely check this out. I will just go briefly through some points. So becoming a delegator, you will be charged 0.5% fee, which means that from 1000 GRT you will automatically burn 5 GRT. So you have to calculate in advance. You are going to be profitable. Also, whenever a delegator wants to undelegate, so stop delegating, their tokens are subject to a 28-day unbonding period. So this means that in this period they cannot transfer their tokens or earn any rewards for whole 28 days. So you cannot just jump in and out and expect to withdraw anything instantly. It doesn't work this way. So here are more info about all the different reward cuts, etc. And finally, a guide for calculating the expected return. Also, you have to consider several fees and fee cuts, and also the delegation capacity, which is currently sitting on a ratio of 16, which means that if an indexer has staked 1 million GRT tokens, their delegation capacity is 16 million GRT that they can use in the protocol. And finally, down here is the video guide of the network UI, so definitely you can check this out, and it should explain all the things you need to get you started. And with this, I think we all have a pretty good basic idea about how the graph works and where to find more information. So now, taking a look at the graph token itself, the GRT, we can see that it's sitting on the number 39 measured by market cap, so just over $2 billion US. So it's a bit larger market cap, and I can definitely see why, because of the fundamental things the graph is solving with its protocol. Also, we can see that the maximum supply of the GRT token token is set to 10 billion tokens. Now finally taking a look at the charts of the GRT token in relation to the US dollar, we don't see that much because the token has been launched just at the end of the last year in December, where we can see very quick spike, then a bit of a consolidation, after which it entered this channel in which it stayed for about a month. However, the last few days it broke out of this channel because it was launched so recently. There is not really much information we can find from this really. We can now see there has been the MACD crossover, which was also during this downward market period, so we can expect maybe a more downside and retracement until it enters a new support along which it could continue to go upwards, but that remains to be seen. However, if we take a look at another ratio with the GRT divided by Bitcoin, we can see a much more interesting scenario with this quite a strong support which hasn't been broken yet, with the previous support which was here, made kind of a wedge and blasted to the new all-time highs, and now it's staying in this wedge and coiling up, so we can maybe expect a breakout above and reaching all new time highs in relation to Bitcoin. So by this we can expect some overperforming of Bitcoin in the near future. And finally checking the same ratio but with ETH, we can see pretty similar scenario, strong support which hasn't been broken, these two horizontal support which finally has been broken by those wedge patterns, reaching all-time highs along with this all-time high support, along which is now consolidating a little bit, but I would expect this similar wedge pattern to lead to a new breakout from the ether. So I think in the short term the GRT token could be a better choice compared to Bitcoin or Ethereum. So this is it for today's video. I hope you get some real value out of this. If so, please smash the like button, check the other videos from my crypto and blockchain series on the channel, and also make sure to subscribe for future content to come about blockchain and cryptocurrencies. With this, I thank you for watching and I will see you in the next one. Cheers!